Good afternoon, everyone. Gabe Velazquez here with you, transparenttradeSolutions.com for a Tuesday, 7th October. Welcome back, everybody. We're pretty much consolidating, just talking about the markets real quick. Obviously, that's why we're here. We are basically just consolidating. Today was all about the NASDAQ, so we've got a lot of the same kind of dynamics that we've had pretty much since the beginning of the year. You know, Mag 7 driving the cart, so to speak, right? All the rest of the most stocks were actually down today, by the way, believe it or not. You look at the RSP, which is the equal weight cap S&P, that was down. Russell was down. Energy, obviously, that which I'm going to talk about. Oil, as we've been talking about, counterintuitively has done nothing but go down since the shock event of the Israeli-Hamas war. Now it's actually looks like it's getting washed out, getting to some levels that I think are starting to look better. So in any event, everybody, welcome back. Go ahead and give me a thumbs up, put some commentary. Again, I'm going to put together some more material for our next class. We had a good class on our mispricing, which is apropos right now, especially with oil and some of these other markets that have, we talked about that last week. I think, oil is getting into those kind of critical areas where it is kind of getting overdone. But you never know with oil. It's just such an emotional type of trade. Anyways, let's go get right into the charts, everybody. Again, give me a thumbs up and all that good stuff. If you did attend the class, I'm going to, keep in mind, I actually had a few people join up, and still, if you, we've actually had a very, very, talking about earnings, Datadog. Pull up DDOG. We were in that today. We had a really nice profit in that. One of the counterintuitive is that everybody tells you not to get in front of earnings. I have to tell you, that's where the opportunities are right now, if you understand what you're doing. If you want to learn some more of that, ping me on support at Transparent Trade Solutions, and we can get together on a Zoom call, and I'll go over some of the strategy. I actually did have a class on that. That actually worked out. Last week we had Roku. This week we had Datadog, and we're looking for some other opportunities. Earnings, as I mentioned, are where we really get active on the options market. If you want to know what we're doing, you want to inquire about that, again, ping Tina on at my support staff's support at transparenttradesolutions.com, and we can go over some with you. Okay. All right, let's get into the charts. I'm going to share my screen, and I'll show you a couple things here. So on the S&P, I think I mentioned last week, the SPY in particular was right at resistance. We don't have an actual level per se on the S&P until we get up a little bit higher, up around these areas right up here. And then the big one is all the way out here. Right now, we're kind of just chopping around since the massive rally last week. You can see today, and actually since the weekend, it's just been a very, very, kind of narrow, choppy range here. Nothing to really hang your hat on, other than the SPY. I mean, I've been with options and such, we are actually more involved here, and you can see we're still technically, this is not the S&P futures, and the this is not a supply zone or distribution, as we call it here at TTS. So to be clear, this is not a distribution or supply zone. This is just a massive resistance level that came up here 1, 2, 3, 4 times and sold off. We're sitting there. We technically have not broken above that. We are and by the way, if rates jump up tomorrow, we got a 10-year auction tomorrow that could actually set prices back down. I'm just, even if it just pulls back to here again, we got these double gaps here. Now the whole today, it was all about the NASDAQ, right? So the NASDAQ, in fact, is also approaching resistance, not a supply zone, not a, what traditional for some of you guys, this is not an actual distribution level. It's just a supply. It's just a resistance, right? We've got 1, 2, 3, 4 attempts, and now this leaves. So clearly the NASDAQ was the outperformer today. And again, we go back to why, because Apple came above 180. You got, the semi stocks were up a lot. Datadog was up huge today. Some of these cloud stocks. So it's all about technology, really. In contrast, you can see the Dow never took out. You can see the Dow hasn't made a new high from last week, the last couple of weeks. Russell, in fact, was down today. Okay, so and then again, you can just go through various sectors. The RSP, which I haven't, I've been talking to my members about. RSP is the equal weight. So we've been watching this in relation to how the weak or strong the breadth is in the market, and you can see that was actually down, which basically is signaling that very few stocks rallied today. In fact, again, just go through it's all tech stocks. Energy was down, banks were down, materials were down, biotech, pretty much everything was flat or down. Other than, again, just go through all your tech stocks, Apple's, Microsoft, Google, the usual suspects. That's really what carried the market today. So whether that can sustain itself and can carry this rally is obviously remains to be seen. Also, obviously, very important, the interest rate picture. We still haven't broken above the 10-year. This is the price of the 10-year. We had this huge rally off of our weekly demand zone, which we've been talking about here, rallied and still can't get above that. If we can't get moving here on the 10-year, in other words, yields cannot break below 450, then we probably shoot right back up here, and that will probably put pressure on the market. We don't have any type of economic data that could move the market other than Thursday's jobless claims, which is going to be really, really key. So other than that, really not a lot to talk about here with the interest rate markets. Also, the dollar looked like it was going to break down. It's still kind of in the middle of kind of in no man's land, still kind of trying to hang on here. On the big picture, you can see we looked like we were going to break down. We rallied right back up again. Australia increased rates yesterday by 25 basis points, but generally speaking, all we're doing really is just kind of broadening out this range trading. We still have to have a significant break. If we do break, we probably go all the way back down to 99, but that hasn't happened yet. The rest of currencies, not anything really worth talking about. I mean, all the currencies look like they were going to go up and again failed. We'll see what moves the dollar. Next week, we got PPI, CPI, and then, these bond auctions are going to start becoming more important. Gold looks like it wants to break down, by the way, as well. So we're looking at gold right now. Oil, as I mentioned, oil seems to be, today, I think, was a big washout in oil. Whether we hold any of these levels here, it's going to be interesting. I'm looking at a couple of levels here on oil below current price. We'll see if we get there. And again, oil, as you know, is very, very volatile right now. So be very careful in regards to whether you want to get engaged with oil. But I do believe it's getting to the point where it's getting pretty stretched out. Nat gas also interesting, coming into some pretty nice levels after it's been just kind of swinging back and forth. So we're also looking at nat gas. We got a big grain report coming out on Thursday, which will in turn maybe move the particular market. In the grain that's actually moving is soybeans. Other than that, wheat really not doing a whole lot, and so forth. So yeah, in regards to, just I do kind of look at, obviously we spent a lot of time in the stock market with our members. Tesla, big laggard still. You can see it's barely been able to get above 225. This has just been a very big laggard. We've been focused more on these type of stocks. We actually just took profits on this from last night. We put on a trade in front of the earnings and got out today with a very, very nice profit. We were actually long the 85 calls, and we got out this morning right near the highs. So we did pretty well in that. This is very similar to last week. I talked about Roku, and actually we left a lot of money on the table with Roku. Similarly, we got it right here in Roku, so we left a lot of money on the table in Roku. But these are the type of stocks that we're doing at TTS in regards to earnings. Not all of them work out. We actually lost money on VLO because that thing didn't move, but clearly these two stocks made up for that and then some. And so, and we've got a bunch of earnings that we're looking at for the next several weeks. Again, if you're interested in something like this, ping me at support@Transparent Trading Solutions, and we can have a discussion of how you could, in fact, start taking advantage of some of the stuff that we're doing here. Okay. All right, everybody. Again, sign up for the newsletter as well. And if you want some further information, you know where to go. So with that, in terms of it, we've got more earnings. Disney is the big one tomorrow. We've got jobless claims. We got a grain report on Thursday going into this week, and then next week we got some more inflation numbers. But I think a lot of it we'll see if everybody. Everybody's talking about the seasonals now and all that. VIX under 14 is also interesting because last time we came down to 13 on the VIX, we peaked. So whether we go down to 12 this time around, I suspect we're not. I suspect we probably don't rally that much further because now everybody's getting a little bit more complacent. So we'll see. Okay. All right, everybody. Have a great rest of your week, and we'll see you on Friday. Take care.